And we're back. How's everybody doing? Hope you are doing well. My name is Andrew Kuhn, Focus Compounding, on air live with Vetle Forsland, all the way from Norway. Vetle, happy Monday. How are you doing?
Thank you. I'm good. You heard I went hunting this weekend.
I was going to say, what were you doing?
For bears.
I feel like you were like in the wilderness or something. It looked like it was cold and like you were sleeping in tents. I mean, what were you doing?
Well, I was, everything you just said is right. I was out in the cold, in the wilderness. I was hunting. I was like Steven Ronell, like just hunting for, anything I could find. So we were supposed to hunt for grouse, which is like a kind of bird that apparently tastes as well. But we were really unlucky because we went out on Saturday, and the place we were at my cabin, we experienced like the first snow of the fall. So, and it was like super windy. It was super foggy, so we couldn't see anything, and nobody can predict how the goose's behavior is like when there's, fresh snow and everything. So we didn't see a single bird. So we just walked for 8-9 hours with a shotgun, and we had nothing to shoot on.
I know. It looked like you were in like Iceland or something like that.
Like,
I just picture you walking around and just with, a big coat and jeans and boots on and just with a shotgun in your hand.
Yeah. Well, your picture is correct, most likely.
Yeah, that is so funny. That's awesome. So we have a lot of things to go over today. And the first being, you wanted to talk about SPAC craze. So let's hear about it.
Yeah, sure. So, before this year, I hadn't really heard about these blank check companies that now account for $1 in $5 raised in IPOs year to date. So there's like a lot of SPACs are going public this year. We hear about it all the time. Nikola, of course, is probably is like the poster child of the SPAC race. Bill Ackman just launched a SPAC. Chamath, the Facebook co-founder or the early Facebook investor, he has a SPAC where he's investing in Open Door, I believe. And now, last week we had this SPAC called the Climate Change Crisis Real Impact SPAC, which what it does is that it wants to raise money from investors, and they don't really have any real objective for what kind of a company they want to invest in, apart from they want to invest in a company that solves climate change, apparently. It solves the climate change crisis. So I feel like this is a sign of how much liquidity there is in the market, because, there are, SPACs or blank check companies have never been hotter than they are right now. There's just money is being thrown at investors that are promising some kind of investment, mostly into green companies or promising tech companies or software as a service companies. And Michael Burry, he had a tweet out where he said that, so this is the, so SPAC IPOs, there are 110 SPAC IPOs this year. And that's the highest figure since, actually that's 40 SPAC IPOs more than the last peak, which was in 2007 with 66 SPACs. So this is the biggest SPAC craze ever. And the last peak was in 2007 with 4% less SPACs. It just seems like, it just seems very interesting. Do you have any thoughts on the SPAC race?
Yeah. Well, did you see the article that came out last week about, it was by Forbes. There was the youngest billionaire or youngest self-made billionaire. He's like 28 years old and he's trying to do some sort of like electric vehicle or truck or something like that.
Yeah, I think I heard about it.
And it's like, again, it's, like they're pushing it as, the youngest billionaire and he's coming public by SPAC or whatever. And I'm just like, please stop calling these individuals billionaires before they generate any revenue. Like it's driving me bonkers. Focus Compounding makes more than these companies. And it's just like, I don't understand, what's going on and why. I mean, is it because it's good clickbait right now? It's good for headlines, probably.
The market is always right, Andrew. The market.
We're talking about it, but I don't understand what is going on. And it's just absolutely insane. I mean, do you think the people that actually like invest in SPACs and stuff like that, do you think they're actually thinking about it on like a 5 to 10 year basis? I mean, what are your thoughts on that? Or is it just because like it's like this new greater fool game and they're just, as soon as, it's crazy. I mean, here's the thing too, right?
It's a greater fool game. And we have a lot of IPOs every single day. We had 3 IPOs today on the Oslo Stock Exchange. They were all like these green companies. One of them was like promising some hydrogen production, something, Nikola Light. And what you do is that you just sign up for the offer for the IPO offer, and then you flip it basically the day that it goes IPO, because all the retail investors, they cannot sign on to the IPO because there's like €100,000 threshold or something to sign up for the issue. So what you do is you sign for the issue and it gets oversubscribed, and once it IPOs, you just pass it along to the retail investors and they drive it higher. So it's ridiculous.
Yeah,
We're just in a bubble right now. This is like .com light, but for ESG companies.
You know what's going to be interesting is, so for Nicola, our friend Nicola, on December 3rd, more than 2/3 of the shares outstanding are able to be like freely tradable in the market. Right. They come off restrictions. So what are they going to do? I think it's December 3rd. I'm going to make a video on it. I have it down. Yeah, lockup expiration where 2/3 will be sellable. And that is December 3rd, which is, I think, 180 days after some other event. But anyways, right? So it's like, okay, so, and I made videos about this. I'm going to make another one about this because it's driving me crazy, right? I don't understand why anybody would. It's like, why are you holding this company, right? So BlackRock, all these other companies that are up massively on Nicola, it's like as soon as December 3rd comes around, they're going to dump this. I mean, okay, so let's say they invested in Trevor Milton's, grand vision. He's not even in the picture anymore. He deleted his Twitter. He's gone. We're never going to hear about him again until he sells off his stock, which I'm sure is going to come, Did
you see that Financial Times article where Trevor Milton, who allegedly, designed that entire truck, that turned out to be false. He outsourced the design of the truck. So
Tesla's suing him. I'm pretty sure Tesla's suing them for like $2 billion.
That's right. That's how it came out, because Tesla was suing him, and it came out in a court case that, Trevor Milton did not design that truck after all, but they just outsourced it to some guy in Croatia.
Yeah, just absolutely all of it. Just, I mean, when there's smoke, there's fire, right? And it's just like the more you pull back, the more that comes out day by day. It's just terrible for Nikola. I'm like, who's holding this stock? The second GM walks away, which you're like, well, they didn't have to front any capital, blah, blah. But it's like, okay, reputational risk comes in at some point. I mean, it makes him look terrible. I don't get it. I absolutely don't understand. So to answer your question on my thoughts, I think it's bonkers is what I think it is.
Right. Well, SPACs in general is just it's more or less the same thing. It's more or less. So I was going to ask you, so you think all SPACs are stupid? Do you think all SPACs are bonkers, or you just think that proportion of the market is bonkers? Because what Financial Times had an article about how big the global SPAC market really is. And so to put it in perspective, last year, SPACs made up 5% of all IPOs in 2019. This year, it's 20%. It's over 20%. So most of that is going into stuff like Nicola, ESG companies. It's like, this is a bubble, folks. It's a bubble. But the difficult thing is that usually we just short the bubble. But then again, we have this ESG boom because all of the institutional investors, they, get a phone call from the clients and they're saying like, look, I'm watching this video of Greta Thunberg and we need to put more money into green companies. So please invest into more green companies. So far there are very limited amount of green companies in the market. So they don't really have that many places to put their money in. So they just have to pick their spots. So all of the green companies turn into bubbles, and you can't really short it because you're betting against this huge wave of liquidity. So it's a tough situation.
Yeah, it's absolutely crazy. Absolutely crazy. Yeah. Speaking of IPOs, you tweeted last week that chess world champion Magnus Carlsen is going public with an esports spin at 25 times sales, but guiding huge growth. And it looks like in 2018, I'll put your tweet up on the screen. Nice. They did, is that 2.7? I can't see. I think it's 2.7 million in revenue. And then in 2019, it was 3.6, which was a 35% year-over-year growth. And then they're estimating a jump to 8 million out of nowhere for 2020. And then 14 to 16 million in 2021. And then by 2025, 60 plus million, which will represent a 40% CAGR.
Right. So first off, Magnus Carlsen, right? Because he's Norwegian. Obviously, I know him, and we're a bit, we don't really know what's going on outside of our world. So how famous is this guy?
I just Googled it before because you said you wanted to talk about that. So that's to the extent, that's all I know.
All right. Okay. So it's basically the GOAT within chess. It's chess world champion. and he's going public with. So at first, I saw this. I saw the IPO prospectus, the investor presentation that he put out, and I was really skeptical because he's IPOing at a market valuation of, I think, 800 million kroner, which is about like $110 million, which is really expensive, because all I thought he had was like this app called Play Magnus. And what you do in this app is that you play chess against Magnus Carlsen at different ages of his life. So you can play against Magnus Carlsen at 5, Magnus Carlsen at 10, 12, 14, and until he's a world champion at like 22 or something like that. So, 25 times sales for an app seems excessive, to put it mildly. But after reading the investor presentation, I actually got a bit more bullish, because what he and his team are trying to do is that they're trying to build like an online chess ecosystem for, to create the first centralized ecosystem ever for the chess world. I mean, there are almost 1 billion people in the world that play chess. A lot of them play it online. And Magnus Carlsen has this company, and they own Play Magnus, of course, and Chessable and Chess24, many of the largest chess companies in the world. And they're basically pitching this IPO as sort of an esports spin on chess. So they're trying to ride that wave into generating 40% CAGR up until 2025. So I think their goal here is to take all of their apps, take all of their content, and create more options for users to pay for the content that they offer. So let's say they get a significant amount of users, and many of them are willing to pay $10 per month for their for the content, like a Netflix subscription type of thing. You might see some real growth there. And so I'm not sure. I read the investor presentation, and I'm thinking you'll put that slide that I posted on Twitter on the screen. And they had that slide where it said that they think they'll do, whatever in sales with a 40% CAGR up until 2025. And if you take that sales figure onto today's market cap, you suddenly get like a one-time sales multiple, and they're guiding 30% EBITDA margins, which will result into like a 5 times EBITDA multiple, which seems kind of cheap. But of course, you don't know what they put into those estimates. There's a lot of uncertainty involved there. So basically, Play Magnus is just, at least right now, it's a play on, will Magnus Carlsen and his team be able to turn chess into this esports phenomenon? I'm not sure if they can, because they compare themselves to like Tiger Woods and to League of Legends and to Fortnite. I think chess may be too nerdy to, I don't know.
No, I agree what you're saying though, right?
Know.
So I get what you're saying. So like in an era of Fortnite and like PUBG and all these other games that people obsess over, right? Mm-hmm. Yeah, I don't even know, like, is chess a declining, game, right? Do people even care to, or chess? I enjoy playing chess, but again, I don't know, like the average, elementary or middle school kid, are they going to be as interested in chess as they were in the past when you have an iPad and all these apps and, all these different sort of games?
Are you good at chess?
Which is of course the way that everybody would think about it, right?
Right. Am I good at chess? Are you a good chess player?
I wouldn't say I'm a bad chess player. I wouldn't say I'm a good chess player. I think I'm a good. I would say I'm not a bad Texas Hold'em player. I like playing Texas Hold'em a lot. Yeah.
Well, that's a whole different game. And
yeah, I know. But I play Texas Hold'em and chess. Those are the only two, games. I actually just bought a new chessboard the other day.
Oh, that's cool. Yeah. I played Texas Hold'em this past week, actually. I love Texas Hold'em. I don't play chess that much. But anyways, my question was, would you watch a live stream of this great chess player? Would you watch like a live stream?
I would say no. Guy? I would say no, but that's not okay. But I would watch, poker on ESPN. I think that is actually kind of interesting, like the World Series of Poker and stuff like that. So, but I don't know, but maybe I'm not the right type of, end market, if you will, right? Like that would find it enjoyable. But I don't know if anyone would find it enjoyable, quite honestly. I'm sure some people would, but I mean, if you're watching like a grandmaster or somebody that is like him, playing is really good. But so
that's kind of what they had. So they had, I'm looking at the investor presentation right now, and they said that this was the #1 event on Twitch during the final. But that was during the final of chess, the chess tour finals. That was one of the largest, tournaments in the history of chess. But even then, it was so the Magnus Carlsen chess tour finals was at number 5 of the top esports events of that summer. So behind League of Legends, behind Rocket League, behind Call of Duty, and behind Valorant.
Oh.
So, and this is, this is peak chess. This is maybe peak chess. And
well, maybe they'll bring more awareness to it if they're going to, do with the eSpin, right?
That's true. So, yeah, I don't know. So apparently 140,000 people watched Magnus Carlsen beat this Russian guy, and a lot of people seem to enjoy it. I'm not sure if they can make a ton of money off it. There are a ton of chess apps. The app market is difficult, but it's, it requires low capex, low overhead, and it's a very good business to be in. But I don't know. It may seem too pricey for me when it IPOs.
That is what is super cool too about chess and I guess card games in general is there's not really a language barrier. You could play with anybody, even if you can't communicate with each other and the rules and stuff like that, you can play, Yeah, it's going to be an interesting one to follow. When's it all going to go through?
So they're listing on Merkur Markets, which is this new listing place in Oslo. So it takes like 2 weeks or something like that. So they'll IPO probably next week. October 5th is the date I heard. October 5th or something like that. So Magnus Carlsen will be selling 20% of his shares. So he still has some skin in the game even after the IPO.
Nice. Next topic you wanted to talk about, SIVB.
Right.
Tell us about that ticker.
Well, I just saw your YouTube video about overlooked banks. So you can summarize that video if you want. What did you talk about?
Yeah, well, we wanted to do that video because Geoff has always said, somebody asked us if you were to construct a portfolio of stocks greater than $10 billion, I think if he had to pick 5 stocks, which stocks would he be interested in? And this was just kind of on the fly. And he was like, well, I could always find a bank. And, Geoff has invested in a lot of banks and he's very bullish on banking in general. He actually said in the video, in the podcast, that he thinks it's one of the most interesting industries in, American banks are in the world right now. And so what we wanted to do was just really go through and look at a bunch of smaller banks, so sort of more off the beaten path type of companies. I mean, there's so many banks out there. And there's a couple things that, he likes when he looks at banks. So we just went through 8 of them, I believe. Most of them were less than, $500 million in market capitalization. So we just spent some time really, going through there. This is a very long video, very good one. So definitely check it out.
Yeah. But did you ask him about any European banks?
We did not go over European banks, all American banks.
Because European banks now, they've never been cheaper, ever. I mean, I think they're at the lowest. The European bank index is at its lowest point since 1988 or something like that. So it's trading at a price to book of 0.4 times. The Euro bank index is down 30% since the lowest from the Great Financial Crisis. So not year to date.
Wow.
Down So
it's interesting industry, Vatla, because we always talk about it. I mean, it's pretty much, banks can be around for 100+ years. It's fairly certain, right? So if you have high class operators running a bank that, run it, efficiently, there's a massive runway for banks.
Yeah, exactly. So,
but tell me about this bank. Yeah.
Right. So I think there are some cheap banks in Europe, but this is beside the path. This is not the bank I wanted to talk about, though. I wanted to talk about this different banks, which is
SIVB.
Yeah. So that stands for Silicon Valley Bank. So you may realize what they're doing. They're a lender/deposit taker to the VC business, and they've been that for 35 years. So they're basically the number one bank that venture capital companies or venture capital funds and private equity firms go to when they need to lend money or when IPOs need to lend money and stuff like that. So they have a very strong market position within this segment. So I'm not sure about this year, but last year they represented 70% of all venture capital backed tech IPOs. So So they have a very significant market position in that segment. And I'm sure they'll grow a lot this year. I haven't looked at any forward earnings forecast or anything like that, but this year has been an amazing year for the capital markets. A lot of companies have gone public, which we talked about, a lot of SPACs, a lot of tech companies. You got Snowflake, you got Open Door, you got all those Airbnb is set to go public, I think. So this has just been a terrific growth story for the 2010s. I think.
Yeah, it looks like it. I'm looking right now. It's trading 1.6 times price to book, which a lot of bank investors, for whatever reason, they want, a stock below book. But Geoff always says he'd rather have a really good bank and still pay like 1.5 times.
Oh, really? Why does he want to pay?
He's just okay doing it if the quality of the bank is great, right? And that, the return on equity, is good. You're looking at what he cares a lot about is, growth in deposits and the quality of those deposits. And just looking at QuickFS, looks like a 10-year CAGR of deposits is right around 20%. Net income, gross loans, everything, looks like it's so really exploded up.
In the 2010s, assets grew over 400%. And, the banking sector in general grew about 30%.
Yeah.
So it's grown a lot. And return on equity has been about 15%. They're guiding like a target of 20%. Not sure if they're going to achieve that, but that's their target. EBITDA margins are, 50% or 45% or more or something like that. And, as you mentioned, it's trading out 1.6 times book, which sounds fairly cheap to me. And, but of course there's the bear side of this, and you can probably guess what the bear side is.
Silicon Valley being in a bubble.
Exactly.
California. Yeah.
The extinction of tech unicorns, the VC bubble.
Uh-huh.
So, obviously they've grown a lot if you look at the long-term earnings chart of it, you can kind of see two peaks. And the first peak is very small, which was in 2000 compared to this peak.
Sure.
And so they've kept growing since 2000 and since 2008. They made a lot of money. The question is, are we in a VC bubble? What will happen if the VC bubble bursts? Are they lending money to business that can't pay it back? There's a lot of questions there, and I think that's why it's been trading sideways for about 3 years, if I'm not incorrect. And it's being relatively cheap at one point.
Yeah, what's interesting is their loan loss reserve to loans has gone down. And if you look at their income statement too, EPS has exploded higher. 2010 EPS was $2.24 fully diluted, and in 2019 it is $21.73. And shares outstanding has gone from 42 million to 52 million over that time as well. So there's just been massive growth here.
Right. So 13 times sales. No, I'm sorry, 13 times earnings.
Massive growth. Yeah, that's what trading at 13 times earnings right now.
Right.
Wow. Yeah, that's interesting. That'd be a fun one to read, like the FDIC reports and learn more about that bank. SVB Financial Group. And that is SIVB. So that's very interesting. So I just want to briefly talk on this because we've been kind of following the story, Vetla. TikTok, last night, news came out that a judge had blocked the download ban that was supposed to happen with President Trump on TikTok. We still have Walmart and Oracle in the works for a pending deal with the company. It's going to be interesting to see how they, structure that, what Trump tweets about it, if the government gets a piece of it, just like what happens with all of it,
Right.
And it looks like until November 12th is like kind of their next deadline until they have to figure something out with it or whatever. But, if Trump demands some sort of government payment or something like that, a piece of the pie, that's just going to be, I don't know. That doesn't sound like the United States of America to me.
No, right. The land of the free, and you can download an app which allows you to, dance or whatever.
Yeah.
I don't know. Do you use TikTok, Andrew?
I have it. I downloaded it at the beginning of quarantine because everyone was talking about it, and I just want to see what everyone was, talking about. But I deleted it from my phone, so I don't go on it. The only TikToks I really see are on Twitter that people repost, and I just see the TikTok logo or whatever.
Same. Yeah.
Did you see that one guy riding a skateboard and drinking cranberry juice? It went viral on Twitter.
I did not see that.
Oh, it's so funny. No. I don't know what he's doing, but I'm just I like what he's doing. It's just so random. So I just briefly want to talk on that. I don't know. We'll see what happens with that. I'm most curious to see though, if a deal does happen, which I'm sure a deal will happen, what is going to come from that for the United States? And is Trump going to be, satisfied with, whatever, because I think that's, again, it doesn't sound like the United States of America to me, but we'll see what happens.
Right.
So last thing I want to talk about is telecommunications. Have you ever analyzed a telecom company?
Never.
So I went down this rabbit hole. Last night I've read Cable Cowboy, and then I came across this lecture by John Malone from 2012. And obviously, he's been incredibly successful in the telecom industry.
The inventor of EBITDA.
Yeah, dude, you know what's so funny? If you watch that video, he probably mentioned tax, like the word taxes. I'm not even kidding, probably 100 plus times. And all about structuring deal to minimize taxes in different ways, to shelter taxes. And now he's like, it's not bad to avoid taxes. It's bad to, evade paying taxes.
Right. So apparently Trump learned a lot from Joe Malone, I guess.
Yeah, I know, right? That was another one.
Yeah.
So first of all, I'm going to link that down low. Watch this video. It's literally like an hour and a half long. It was one of the best lectures on business I've seen in a very long time.
Wow.
Very long time.
So I saw your tweet. I and I even liked it. And I was like, this looks interesting, but I didn't watch it.
It's from 2012. Yeah, it's really good.
So I should watch it?
Yeah, you definitely should. So, and a lot of investors, value investors, they love these telecommunication companies, right? So I kind of went down this rabbit hole, and I'm kind of like becoming obsessed with these companies and like figuring them out. I mean, I have a bunch of different companies to look at. I literally just started looking at it today, like this morning, like actually diving into businesses, but there's CBB. I'm gonna link them all down below. CBB, CNSL, LICT, that's Mario Gabelli, FTRCQ, Nuvera, that's a company that actually I was kind of interested in to start with, and then which started all of this. OTEL, which I believe they got acquired. ALSK, that's the one I'm actually kind of the most interested in right now. And again, I've been looking at it for like an hour, so this is such early stages. But if you think about like the actual business itself, right? So like rural broadband, that has low population density, which, means less vulnerable to competition. And what's interesting about these businesses, Vetla, is a lot of them get like, grants and stuff from the governments to like build out these, whether it's fiber optics or, just the broadband in general. And what's interesting is most of these companies that I'm looking at, a lot of their legacy businesses, which is really like DSL or cable internet, is all like declining, but their fiber business, which is like sort of the new growth driver, is all like, growing. And cable internet is, it's just the type of connection that, transmits data through a cable. DSL is kind of, with the telephone, where you connect it through, transmits data over a telephone network. And then fiber is this new, this new way of doing it. And when I say new, I mean past 5 years new, through plastic or glass wires, as light waves. And that's supposed to be like a better way to get like more speeds and bandwidth and stuff like that. So if you look at a lot of these companies, the legacy businesses, the DSL or like landlines, stuff like that, that's all declining. But the new fiber is really what's, really taking off for a lot of these companies. But looking at ALSK, Alaska Communications, there's like two people in Alaska that provide, internet and broadband in the state of Alaska. And this company is one of them. And it's $100 million market cap. It's very small. And if you look at, like all of their, let me pull up here. I'll pull up on QuickFS. Right. If you look at like their cash generation and stuff like that, I mean, it's enormous. So like John Malone told us in that interview, if you watch it, don't worry. And if you read Cable Cowboy, don't spend a lot of time thinking about reported profits, because of DNA and stuff like that. Worry about cash flow. And, like I'm looking at Alaska Communications right now. In 2019, for example, they produced $5 million in net income, but $59 million in cash flow from operations. So it's a really interesting play and really interesting learning about these companies. I think a lot of them are really cheap. I think the industry, went through a consolidation. And then a lot of businesses were reinvesting in fiber, and their old legacy businesses are declining. But I think fiber could be, pretty big for a lot of these companies. So it's kind of interesting learning about them. And I have so many different comps to go over and look at all these.
What are they trading? What's like the industry trading that?
Okay. Well, I mean, I was, reading a report that the average EV to EBITDA private transaction multiple was 8.5 times. And that's a private transaction multiple. But this company, for example, Alaska Communication Systems, assuming this is all normalized, QuickFS, it's 3.7 times. And most companies you come across, it's very similar to that. And they all generate a ton of free cash flow. Again, you know, a lot of these more rural ones own the markets that they're in. So it's like a bigger internet company is probably not going to go into rural markets. They're just not going to do it. So there's a lot of, you know, competitive advantages right there. The most famous one that a lot of value investors talk about is LICT, because that's controlled by Mario Gabelli. And that has a market cap of, I think, like north of, you know, 300 million or something like that. Wow. But all these companies look very cheap. And again, I'm just very early stages of looking at this, but I'm just putting it on people's radars if they want to, you know, look at it. But it's very interesting. Yeah. They all generate a ton of cash flow, flow.
Right. So what's the risk there that like Verizon or AT&T or one of those are going to just take the market
Probably.
share?
Yeah.
Right.
I mean, like
to buy them up, or are you just going to like install?
Well, there's so many acquisitions industry, you know, because they're very much accretive, and there's a lot of synergies between, you know, these internet providers. I mean, that's what John Malone basically did, you know, and just how you structure the deals is, I guess, like a very important part to the process. But so like in Alaska, for example, this Alaska Communication Company, they're one of the internet providers of broadband. And then the other one is Liberty, which is, you know, part of his whole, which is part of John Malone's whole, you know, empire, if you will. But even Alaska, they think they have 40% market share in Alaska. So it's just, it's definitely very interesting. I mean, if you think about it, you know, the business is very sticky. I don't know if you've ever dealt with internet providers, but it's not that fun to deal with them. You get it set up once and then you're typically
done. Keep calling you and they all want something from you.
Yeah. And here's the thing too, right? So I'm in Dallas, which is a very populated area. I was talking to somebody that was telling me about, he knows people that live in like rural Oklahoma, and I'm pretty sure they're still on like DSL. Like you have a time limit on how long you could be on the internet.
Right.
So it's like, you know, like when you live in a very populated area, you forget that most of America is rural, a big part of it. And there's like still people that that's what I'm saying. There's still people that are 20 years behind. So it's very interesting. And, you know, Alaska, for example, too, it looks like they've deleveraged a little bit. They sold part of their business to deleverage. So their debt has come down. Sounds like they have like a new CEO. Again, very early stages, but I'm definitely intrigued. And I understand why a lot of value investors like these companies. So I'm very late to the party, but it looks like the stock hasn't gone anywhere. So maybe it's
Have you talked to Value Stock Geek at all on Twitter?
No,
but you know him, right?
Oh, yeah, of course. I'm sorry. Yes, we've talked. Yes.
Oh, you talked, right. So he's a very smart guy. He's a very nice, clever dude. So he, you know, I recommend everybody to follow him. But he actually pitched me, or he sort of pitched me a company in Telecom. So he basically called it the Verizon for Indonesia. It's called Telecom Indonesia, and they're listed on they're listed on the Indonesia Stock Exchange. They're also listed on in the New York Stock Exchange. 50% of it is owned by the government of Indonesia. And I didn't really look at it. I'm just reading his pitch right now. He just said they have solid financials. EV/EBIT multiple is 7 times. Dividend yield is 5%. Consistently high margins. They're above 35% often. And they've been growing, and return assets about, 15%. I don't know. I just thought it was interesting.
No, all these companies, I mean, literally, if you look at a lot of them in QuickFS, you can just pull it and just kind of look at it from a high level. They all look very much the same, right? Generate, pretty good gross margins. And then the further you get down the income statement, there's like depreciation and stuff like that. That's a pretty big expense or whatever. But then, the change to cash flow is just massive. So it's fascinating. And the businesses are, like I said, they're pretty sticky, and they own the markets that they're in, especially like rural and stuff like that. And a lot of these companies too, if they were billion-dollar market caps were more followed, I think these multiples would probably be like double where they are right now. Just because like, if you look at like the larger companies, that's, what they go for. And even like the private market value of these businesses are way higher than they're currently trading in the market. So I don't know.
So what's the free cash flow yield there?
Let's see. Well, this one's trading at EV to, so Alaska is EV to free cash flow of 15 times. So free cash flow yield, call it 6 to 7 times right there. Most of them were paying a dividend. I think Alaska actually, or it was Nuvera, they stopped to, preserve cash through COVID or whatever. When you actually think about like COVID, for example, too, right? People being from home, broadband, they need broadband bandwidth and all that sort of jazz. I don't know. I'm thinking like,
10% free cash flow yield on a solid business. I mean, that's not the kind of view you would get in the era of, what's it called? Not SERP, but there's TINA. There is no alternative. And here you can go and buy telecom businesses and you got 7% free cash flow yield.
And again, I'm so early on in this. People that are familiar with these companies are probably like, how are you just figuring out about this? Or like, you're an absolute idiot. But I'm just saying like, so you look at like a lot of these companies had pretty big multiples back in early 2000, right? And I don't know if it's just they levered up with too much debt and they were trading at such high multiples that it came back to earth. Kind of like when we were talking about Microsoft on the podcast, Geoff and I, how it was trading at like 50 to 60 times or 15 to 20 times sales back in like, early 2000s. And it just took Microsoft so long for it to come back down to life. And now, of course, Microsoft has traded or has, rebounded or whatever. But the business fundamentals were always growing at Microsoft when the valuation kept coming down for the stock. So I don't know. I'm just like, is this kind of like one of those situations where these companies were just trading at ridiculous multiples with tons of debt that they've really come back down to life, and it's still a needed industry in society, and it's really like, how do you play that going forward? I don't know, but I'm definitely intrigued by these businesses, and we'll probably talk a little bit more about it as I learn more about them. I just keep looking and doing research, and I keep adding all these other companies to learn about. So there's just so many of them.
That's the wonders of doing research in the United States. When you're in Norway, you run out of companies to look at.
Yeah.
In the United States, you keep digging, you find new peers. It's like an endless hole. So you get a lot of opportunities there.
Yeah. So absolutely. I mean, again, and there's like regulatory competitive advantages they get, and a lot of their business models get grants from the government. And it's very sticky business, reoccurring business. So I don't know. I think it's very, very fascinating. Very fascinating. And again, if a business were to scoop them up, the private market value, if you will, would be probably a lot higher, and then it's like, okay, well, maybe these large companies like Charter Communications and all these other large ones that are trading at, I mean, like, let's look at Charter right now. Let's look at it. And again, maybe this is like apples to elephants, but let's see where it's trading right now. Charter Communications. Okay, so it's not even pulling up on.
They don't even have it. That's how
there we go. We're good. No, we're good. Right. Yeah, right. EV to free cash flow, 44 times. EV to EBITDA, 12 times. So it's like these companies could start scooping up all these other companies that own their markets in like Alaska, for example, rural Alaska and stuff like that. And then you get that automatic multiple re-rating. These companies that are at 3 or 4 times EBITDA.
And everybody always says like, oh, it's cheap because it's like on the OTC market, or it's illiquid or whatever. It's small, so it doesn't deserve a higher multiple. But then suddenly it gets bought up by this huge competitor, like
that's something that happens.
Market value. It's just absolute, Or you get you collect a 10% dividend yield every year. So
and that's it too, right?
I don't believe in I don't believe in this small cap multiple theorem, that the smaller the company, the lower the multiple. It doesn't make any sense. You buy a company, you collect either the dividend, and if you can collect, 50% dividend yield over time, while big competitors are, collecting a 5% dividend yield, they'll just buy the smaller company. That's how easy it is. And in the meantime, you collect the dividend yield.
Yeah, I mean, or like as these legacy businesses start to, decline, and these more growth segments that these companies have of fiber, really start to take off, then you're going to have these companies start to look very growthy again. So I don't know.
Right.
I think it's definitely worth studying to see which one you can find. I'm not advocating Alaska at all. That's just the one that I started at Nuvera, then I came across Alaska. I think Nuvera is actually really interesting as well. So definitely take a look at it. I'm going to put all the comps that I'm currently looking at in the about section. Like I said, I'm about an hour into learning about the industry. Nice. Other than I did listen to
a long hour, though.
I know, right? Other than reading Cable Cowboy and then listening to John Malone, that was just incredible. I could listen to him talk about business all day long. I mean, he's one of my new favorite guys to listen to. So I'm gonna start looking for more videos on him. But I'll put that all down below. But that's it. Vetla, do you have anything else today?
Not really. No, I don't have anything else actually. I'm empty. Empty of
All
stuff.
good. Well, I want to thank everybody so much for tuning in with the both of us here today. Make sure you follow Vetla on Twitter. I'm going to put his handle down below. Hit that subscribe button. Thank you so much, everybody, for the support. Check out the new Focus Compounding app that finally went live this weekend, both on Google Play and iOS. You do have to be a subscriber to the app. I'll put the link down below. You can really subscribe at focuscompounding.com.
By the way, that new intro you have with that like jazzy intro, it's amazing.
You like that?
I love it. It's
not
great.
bad. I'm learning way more than I ever thought. I'm learning way more than I ever thought about film and all. It's actually like there's a lot to it, like editing and film and all this stuff. I'm like, now I understand why people have degrees in this. I'm just like, I bought a $450 course. I didn't. Focus Compounding bought a $450 course, like on YouTube and stuff like that. For like YouTube, and they have a section in there on like the right camera, the right lighting, the right audio, and it's still never as good as I want it to be, but I think we're improving, little by little every single day. So
brick by brick.
That's all. That's right, brick by brick. That's all you can ask for. Cool. Well, I want to thank everybody so much for tuning in with both of us, and we will see you in the next rundown.